Hearing so many answers. Would you like to put $1 on your answer?
Yeah, because it's the only one that's an installment type.
Yes, you'd like to put $1 on your answer?
Then I'm going to need a ride back to the hotel if I'm wrong.
Okay, we got room. Do you have $1 on you?
I have the one you gave me.
Oh, all right. Well, you're going to get another $1 then. Because you're right. Only one person at a time can bet that. Car number 1 is the correct answer. I'm going to explain it. I'm going to explain it to you, Lucy. I'm going to explain all of this to you. That was an old Desi Arnaz Lucy, right? She just won $2. By the way, if you were in this morning's class, it probably cost me about $11 out of my own pocket, just so you know. So I'm not afraid. All right, so let me explain these things to you. Shh. All right, you guys are a lively group, and I love it. Lots of action. So let's go through this. First of all, the credit card would count. Do you know why? It's revolving. You could pay it down, you could charge it up. So R next to that revolving, we have to count it. Car number 1 is an installment debt. It's got an I next to it. How do I know there's 10 payments or less? 3,000 they owe, you divide it by the 300 payment. What I do is I'll just add a 0 to the payment. If the payment that I put with the 0 on there is equal to or greater than, I know it's less than 10 payments. Now I say generally speaking because they've changed the rules a little bit. There are times where the underwriter would not take that. Let's say you were making your payments and I went to the underwriter and said, you got 10 payments left on that, can we take this off and not count it? They'd say, well, the problem, Doug, is that she took out a 3-year car loan, but she's in year 11 paying it back because she's been so late. They're never going to let you get away with that. So it's all discretionary there, right? Okay, what about car number 2? It's not a loan, it's a lease. It's a lease, and leases have to count. Why? What happens when you turn in the car? You gotta get another car. So a lease counts, but I'll show you some ways that we could eliminate that lease. Would you like that? Yes. Awesome. Car number 3 we have to count because it's a very expensive car. They got a high payment. They're not paying it off in 10 payments, right? Student loan, it's deferred. It used to be years ago that if it was deferred for 2 years or more, we did not have to count it. They've changed that rule several times. Now the rule is strictly 1%. Hi, Christina. Come on up front. Sit up here. Sit up here. 1%. So what's 1% of $30,000? 300. Who said 3,000? I'm going to take your $1 back if you stay with 3,000. That's 10%. 1% is $300. We will use $300 as the payment on there. Now, if you have people that have student loans, don't let them call the student loan place and say, how much will my payment be if I amortize this to pay it off? That will always be a higher payment, and that will go on that credit report. And if we see that, we have to use that. Using the 1% most of the time is beneficial. Are you with me? Okay. Child support, I have no amount there, but I have a $750 payment. Do we use it? Of course we use it. How long does child support last? 18. Forever. Who said forever? Forever. All right, in New York State, I think it's 26 if they're in college or whatever. Yeah.
So, actually, they changed it to the age of 18.
No.
No, if they're in college full time, trust me, I'm in this situation.
I wish I was divorced from you.
If they're in college full time, it's till 26. So that covers graduate school too. Yep.
All right, good. You feel like you're learning a few things? Oh, yeah. All right, good. So let's continue on. So let's go over this credit report. How many people did I say lived in the house? 2 people, right? Husband and wife, they live in the house, no kids in the house. They have 3 cars in there. Who does the cheapest car in the house belong to? The husband, right? Always the husband, right? Everyone knows that. Car number 2, the nicer car, who does that belong to? The wife, right? And who does the really fancy car belong to? The girlfriend. What the hell's the matter with you? Didn't I tell you guys I'm Italian? You got to have that gumad, right? Don't tell my wife, all right? Is that bad? Oh, don't tell my girlfriend either, right? All right. All right, so look, those things show up on credit reports. They actually happen. So let's talk about a couple of things. Number one, has anyone here ever co-signed for a child to buy? Okay, first name again?
Raul.
Raul. Hi, Raul. How did that work out, by the way? Okay, I'm going to say not good. But you co-signed for them, and did you co-sign or did you sign for the loan and they were the co-signer?
No, it was a Parent Plus loan.
A Parent Plus, okay. And did they pay back the loan under their own name and their own checking account?
Yes.
Good. Did they pay it on time for at least a year?
Yes.
They did. So, do you know that after 1 year of them paying on their own, without your attachment, that if you went to get a loan, that we might say, we're not going to count that debt against you? Did you know that? Mm-hmm. Nice. But if they were missing payments, that's going to hurt you. Because you're supposed to be having the cosigner, and you're supposed to be picking that up. Yes?
More or less industry-wide, did you just say?
Pretty much industry-wide. Things change in underwriting every day. So what's right today might not be the same tomorrow. Yes?
The one thing, because we did it about a year ago, the thing is we do need to provide documentation that the kids are paying their loans off.
Of course, we always want to see documentation. We like you, Raul. We trust what you're saying to us, but there's a saying in the business, trust, but verify, which is another way of saying, hey, we don't trust you. Just letting you know. All right, let's continue on. So, the lease. Let's put on our thinking caps for a moment. And I want you guys to come up with a reason why we may not have to count that lease.
They got another car.
Because they got another car?
Oh, because they have three altogether.
Yeah, so, but we still have to count it. It's there. They're making the payments.
They have to get another one.
Yeah, but if we're doing the loan today, they're still paying it.
But right
They don't really-
now, it's 10
So you're saying because it's 10 payments, even though it's a lease, yeah, that might fly, but I like the way you're thinking. Who else had an answer? Yes?
Do I get my dollar back?
No, that wasn't a dollar answer. 50 cents. What's your name? Hi, Jackie. How are you? Jackie, what's your answer? Yes. So if they have that car and the business, another business pays for it, outstanding. Here's another thing. I had a loan like this one time, one of my loan officers. We said, go down to the car dealership and find out what it would cost to do early termination. I said, you got more than enough money in the bank. If you could turn it in and they charge you $5,000, pay it, get the proof right away. We'll go ahead and report that to your credit bureau, and maybe your score will even go up because now you don't have that. But we eliminated $750 a month from their payment. That could be several $100,000 of borrowing power right there. Does that make sense? Good. I like the way you guys are thinking. By the way, do you think we do that stuff on every loan? Heck no. If somebody's qualified and we don't have to do another thing, we're going to do the minimal amount of work, just like you will. They're already qualified. We don't need to do it. But we do this when we have to work with people, when we have to find ways. I say this all the time in the mortgage business. The debt-to-income ratio is where it separates the men from the boys, or the professionals from the non-professionals. So let me show you quickly how debt-to-income ratio works. Does that look like anything else we worked on today? Looks like LTV. What do we do with that? Divide. Debt divided by income. So we look at their monthly debts, we divide it by their monthly income. I showed you how we figure out monthly income. Now we got to figure out their monthly debts. What do you think would count in their monthly debts? Well, if they're buying a house, they don't have a mortgage yet, but we're going to count that in there for buying it, right? What's that?
Every payment that appears on the credit.
So any payment that's on the credit report definitely counts.
The minimum monthly payments on the credit card?
The minimum monthly payment. So here's what happens. So they're buying a house, right? So let's say that they make $10,000 a month in income. Okay? There are loans, conforming loans, that'll say front end 45, back end 45. There's other ones that'll say 50, what is it that they do? They do 47 front end, and 56.9 back end. That's a FHA loan. This is a conventional loan. What that loan is saying to us, if you want to do this conforming loan, the most you can do for the front end, right? You got the front end and the back end on DTI. The front end is your pity payment. I showed you how that worked a little while ago. So this is just your mortgage payment. We also call that your housing ratio or your debt ratio. So if I say to you, what's the front ratio, it means the same thing as what's your housing ratio. That means what's your pity payment on that house compared to your income. If I ask you what's the back ratio or the debt ratio, I'm asking about this back here, and this includes all debts plus your pity payment. So what's the most on this loan that I could have a borrower pay as a pity payment? $4,500, because it's 45% of $10,000. That's the correct answer. It is $1. You had to hustle me for the dollar. I was going to give it to you anyway. No, you earned it. No, you don't want this dollar?
I'll take it.
So you never see any of the money, is what you're saying. So that's my girlfriend here. All right, good. So that's the correct answer. What if I figured out the person's pity payment on the house they're looking to buy, and they only came to $3,000? What could I do in this loan? They could have $1,500 to pay boat loans and car loans and everything else. So that's a total of 45. So they're going to have a debt to income ratio of 30% on the front end, 45 on the back end, and they're good to go. But if they were using all 45% up front, they could have 0 on the back end. FHA allows them to borrow more. Who's got a calculator? What's 47% of 10,000? Oh, what am I doing? 4,700. I don't need a calculator for that. And on the back end, it would be $5,690 a month. So they could have $4,700, which is a higher payment than a conforming, and they could also have a more debt on the back end. Does that make sense? Yeah. That's debt to income ratio. I don't want to get too complicated with it because it's really a subject that could take hours to go over. But I want.
45 and 47, the actual numbers.
Yeah, right now we have loans that do 45. Sometimes they'll go 50 on the back end, but 45 is some conforming loans or conventional loans. FHA is 47, 56, 9 on the back end.
What was it years ago?
32, 40, 32, 38. 28 is when they started out a long time ago, 28, 36. Yeah. Is that worth the $2 that you invested today?
My $2.
All right, that's what I'm talking about. All right. So is that pretty good? You like that? Yeah. All right. So you guys all saw my friend Christina walk in here. Hi, Christina. How are you? Why don't you come up front? I'm going to introduce you. So if you guys come to these conventions, you're members of the National Association of Realtors, yes? You have people that lobby on your behalf, yes? You have people that represent you. Your dues, you want to know where they go? On vacations, right? You go on vacation? No. So help me in welcoming to the stage Christina Lee Stevens. Hi, Christina. Christina, tell everybody who you are.
Well, my name is Christina Lee Stevens. I'm from the Bronx. I am the president of the Bronx Manhattan North Association of Realtors. And I'm also one of your FPC, which is called Federal Political Coordinators. So I go on our behalf to lobby on our issues, especially the tax reform. So we go to the Senate, we go to the Congress, and we fight. So I do that for national, and I also do that for state. I'm also a licensed real estate instructor, so I do teach licensing, and I also teach the broker's course. And I'm also one of the authors of a course that I wrote for continuing education. It was supposed to be, but now first time licensed realtors are using it to qualify to start work immediately. So I do a lot of work in real estate. I've been in real estate for 23 years. Looking forward to networking with some of you. I know this is New Jersey, Pennsylvania, and New York. So hopefully we can send some referrals your way, and you send some to me.
I know she's losing her voice a little bit. Stay right here. She's losing her voice a little bit because she's been to every party that you could possibly have. She told me yesterday, I did all the classes and everything. It was the first day where I said to my buddy Leo, hey, got nothing going on. Let's go play some poker or something like that. She goes, you know, I got a NAR convention thing going on over here. You should come and meet everybody. So I got dressed and I went to that party. Then she said, we got another one at Caesar's Palace at 9 o'clock at night, but I'm not going to be there till 10:30. I tried to stay awake and I said, I can't make it, but she introduced me to so many people. She is involved, highly involved. So if you're wondering where your dues go, there are many people that advocate on your behalf. Education,